The fire is burning, and every single day, tens or hundreds of millions of dollars of capital are flowing into the network.
Michael Saylor just explained step by step how Bitcoin's market cap eventually skyrockets to 500 trillion.
It's going to go from 2 billion to 20 billion to 200 billion to 2 trillion to 20 trillion to 200 trillion. And when it gets to 200 trillion, it'll chop along at plus 20% to eventually 300, 400, 500 trillion dollars.
Right now, Bitcoin's market cap is 1.6 trillion. So I loved how he goes over step by step exactly what happens over the next 5 years, 10 years, 20 years, etc. Before we get to that, I just have to update you. I have to show you a few different things. So much is happening in crypto from a regulatory point of view. You blink and you miss it. So let's just go through these. I'll list them one by one. First of all, the SEC's investigation into Crypto.com has been closed with no action being taken against the crypto exchange. And we're seeing this across the board. The SEC announcing their dismissal of the civil enforcement action against Kraken Exchange. From companies to individuals, it seems like the SEC and regulators are not only taking action a step back, but also release official statements saying this is over, this is done. You guys go ahead, go forward. Many individuals and companies are getting this clarity, including Hawk to a girl Haley Welch, the SEC closing its investigation, saying they will not pursue any charges or monetary sanctions. President Trump even pardoning 3 BitMEX crypto exchange founders. BitMEX was the original crypto exchange in the space, and Donald Trump has issued a pardon to Arthur Hayes, Benjamin Dalo, and Samuel Reed. This was interesting, and this is big. This is sending a message. In addition to individuals and crypto companies getting this clarity from regulators, we're also seeing sweeping regulatory changes. We alerted you the other day, the US Senate voted 70 to 28 to repeal the IRS DeFi broker rule, clearing the way for innovation in DeFi in America. If you follow us on X, you already know, big win for crypto, according to CryptoZar David Sachs. The FDIC is following the Comptroller of Currency's lead in removing the reputational risk as a factor in bank supervision. Sounds good in theory, not good in practice. It was just vague, subjective criteria used to justify the debanking of lawful crypto businesses through Operation Choke Point 2.0, and now this is rescinded. And we're seeing so many draconian regulations like this being knocked down. Just today, Bo Hines, the executive director of the Presidential Council of Digital Assets, tweeted out another big win. This has to do with the FDIC as well. They just dropped their 2022 rule requiring banks to get pre-approval before engaging with crypto-related activities. This is a huge step forward towards innovation and adoption. I bring all of this to your attention today to show you unequivocally that crypto is entering a whole new era in America and around the world. Just today, President Trump's pick for SEC chair to replace Gary Gensler says his top priority is to create a firm regulatory foundation for digital assets. He's a crypto bull.
Since 2017, I've led industry efforts to develop best practices for the digital asset industry. I've seen how ambiguous and non-existent regulation of digital assets create uncertainty in the market and inhibit innovation. A top priority of my chairmanship will be to work with my fellow commissioners in Congress to provide a firm regulatory foundation for digital assets through a rational, coherent, and principled approach. So this is a pivotal moment for our economy. Entrepreneurs, businesses, and individuals here at home and across the globe are eager to invest in America now that President Trump is at the helm. Yet the current regulatory environment for our financial system inhibits investment and often punishes success. Unclear, overly politicized, complicated, and burdensome regulations are stifling capital formation, while American investors are flooded with disclosures that do the opposite of helping them understand the true risks of an investment. It is time to reset priorities and return common sense to the SEC. I'm eager to get to work for American markets and investors. Should I be confirmed, my goal will be to ensure that the United States is the best and most secure place in the world to do business.
Hey, Altcoin Daily Nation, you need to sign up for the Bitcoin Reward credit card by our partner Fold. You spend USD on credit and stack real Bitcoin with every purchase. Reserve your spot today. Only so many waitlist spots are being accepted. This is US only. Use my link below and get on the wait list immediately. So most people would probably characterize Paul Atkins as a libertarian. It's also correct to characterize Paul Atkins as a pro-crypto individual who wants to see crypto succeed. He has spoken at many crypto conferences, including a Cardano conference. He truly wants to see digital assets succeed in America. This is fantastic. I do think he'll get confirmed. We are seeing one last ditch effort from Gary Gensler type supporters saying he isn't fit like Gary Gensler is fit. For instance, Elizabeth Warren, this is her pitch to anybody who will listen on why we shouldn't confirm Paul Atkins. Then we'll respond to this.
I think this is entirely in keeping with what Donald Trump and Elon Musk want to see us do, and that is loosen regulations, loosen regulations, loosen regulations. That is what Paul Atkins did. He also said repeatedly that no, regulations just get in the way. Everybody needs to do whatever they want, those big Wall Street giants. We saw the crash in 2008. And here's what happens next. After the crash, he has the chance to have a little 20/20 hindsight. He has 20/0 hindsight. He looks back and says, nope, no problem with having let those giant Wall Street banks run wild. And the fact that the American taxpayer had to bail them out, not a problem. That's my concern. If someone has demonstrated such poor judgment, you got to be really worried about putting them in a job. And here's the thing about Paul Atkins. We have both his demonstrated experience, but also look at his experience overall. He says, well, I'm going to divest this interest, but he doesn't want to tell us who he's divesting to, who's buying it, and for what purposes, and what are the long-term plans.
So Elizabeth brought up quite a few points, too, the biggest being Paul Atkins just wants lax regulations, is her claim. Paul Atkins' connection to the crypto industry, the fact he's been involved, is a bad thing. I really liked this analyst's response to everything that Elizabeth Warren said. So you'll see the host ask her, she works in crypto, about everything Elizabeth Warren said. She answers it perfectly. This is a 2-minute clip. Pay attention. This is exactly why we want Paul Atkins.
Let's just get more context to the crypto regulatory environment right now. What it looks like under the new Trump administration. I'm joined now by August co-CEO and co-founder Aya Kantarovich. August provides a platform to manage and trade digital assets securely. And the looser perspective, too loose, or actually are you thinking we will get a balance here that helps serve your growth, but also serve security and the protection of consumers?
Yeah, I think, very commonly people misunderstand where Paul Atkins is coming from, assuming that, we're going to go from the Gary Gensler regulation by enforcement to all of a sudden no regulation at all. And Paul Atkins is very, very strict about no market manipulation and no fraud. So we're going to see KYC, KYB. We're going to see AML requirements. And that's going to be broadly across the crypto industry. And then also clear regulation. And I think if you look at, what Senator Warren's saying before, we saw all of the American companies get pushed offshore, whereas now we're seeing an opportunity to onshore these companies, make them, founded in the United States. And that's a really big shift and a big difference. And you can do that somewhere in the middle.
She was trying to speak to, I suppose, also the way in which he's managed to make it clear that he has no skin in the game. Are those in a position of power over in the administration and in the various agencies doing enough of that, signaling enough of that, that there's transparency when it comes to crypto holdings and they're not sort of managing to benefit themselves?
Yeah, it's a great question. I mean, the same question was asked about David Sachs as well when he divested, I think it was roughly $200 million worth, and he did so at a loss. And, I think it's really important to your point. One, he, disclosed exactly what the positions are. So Atkins has 2 equity positions in Securitize and Anchorage. He has 1 position in a hedge fund called Off-Chain Capital. And he said he divested those. So, if he gets approved on Thursday this week. And so I think we are getting the transparency we need. But the bigger question here is, do we want, professional regulators who haven't been in the space, haven't had that dialogue, running the regulation for us? Or do we want people who have actually been in the trenches, who have had those conversations and dealt with those problems directly, to be running and making those decisions on our behalf?
Therefore, what you want is someone in the job, who understands the asset class, and then makes appropriate regulatory changes appropriate.
If you think about it, there are a couple buckets. The first is the United States, without a doubt, has been losing in the geographic regulatory space. So we have in Europe MICA, we have in Singapore MAS, and in the US we don't have anything. And so, it's not just about onshoring American companies that went offshore, but it's also how do we compete so that we can actually get companies from Europe who are under the MICA registration to come to the United States as well and build here in the United States. The other thing too is, how do we treat clients? How do we structure our entities? A large part that hasn't been discussed for token companies specifically is all token foundations are typically under BVIs or the Caymans. And a big discussion is how do we bring that to the US? How do we launch foundations, token foundations in the United States with clear guidelines?
And why would we want token foundations launching in the United States? Just reiterate the positive nature of this for investors or entrepreneurs who are watching this.
We're looking for transparency. We want to see exactly how these companies operate. We want to be able to go through, tax filings if we need to and audit them as well. So, it gives you the transparency everyone's asking for. But to do that, you have to onshore the company first. And in order to do that, you need the clear regulation. So I think we're definitely seeing a path forward with Atkins. It's going to be really exciting to make, New York, the United States, the crypto capital. We are for finance. It should be for crypto. And it's one step in that direction.
So much is happening in crypto. We keep you updated on a daily basis, so make sure you subscribe. I'll leave you with this video. Smash the like button, by the way. This is Michael Saylor explaining step by step how Bitcoin's market cap eventually skyrockets to 500 trillion. I love this clip.
Every single day, tens or hundreds of millions of dollars of capital are flowing into the network. It's going to go from 2 billion to 20 billion to 200 billion to 2 trillion to 20 trillion to 200 trillion. And when it gets to 200 trillion, it'll chop along at plus 20% to eventually 300, 400, 500 trillion dollars. And where is that capital going to come from? It's going to come from Russian real estate. It's going to come from Chinese private equity. It's going to come from everything in Africa, everything in South America. You have capital flowing from foreign financial and physical assets to Bitcoin. You have capital flowing from 20th century assets to Bitcoin. Capital is going to flow from the 20th century to the 21st century. It's going to flow from physical to digital. It's going to flow from currency-based derivatives to a digital commodity derivative. So it's already happening. It's unstoppable. It's literally like, for me to say Bitcoin's going to demonetize gold understates it. Yeah, it's going to demonetize gold, then it's going to demonetize the real estate that's 10x more than gold. Then it's going to demonetize every long-term store of value. So what you have is a situation like the Europeans show up and they give like some Dutch guilders or some pieces of paper or some glass beads or seashells or stone coins to people using a more primitive form of money. And we have the opportunity to, in essence, just grab 10, 20, 25% of the network, let the entire dynamic flow, and it's going to accelerate. And when the dust settles, the American people will own 25, 30% of that capital, which right now is sitting in 20th century foreign assets.